Superstocks by Kenneth Fisher is an insightful guide to identifying and investing in high-potential growth stocks, which Fisher calls superstocks. The book introduces readers to a unique approach to evaluating companies, emphasizing price-to-sales ratios, PSRs, as a key metric for identifying undervalued opportunities with significant upside potential. Fisher, a renowned investment manager, combines practical advice, detailed analysis, and real-world examples to teach readers how to spot companies poised for explosive growth. The book is structured into several sections, covering the concept of superstocks, the methodology for finding them, and strategies for maximizing investment returns. The first section of the book introduces the concept of superstocks, which are companies with the potential to deliver extraordinary returns. Fisher explains that these stocks often operate in industries undergoing rapid growth or transformation and are typically overlooked or misunderstood by the broader market. Unlike traditional value investing, which focuses on metrics like price-to-earnings, P/E, ratios or book value, Fisher argues that the price-to-sales ratio is a more reliable indicator of a company's value and growth potential. He defines PSR as the market capitalization of a company divided by its annual sales. According to Fisher, companies with low PSRs and strong fundamentals are often undervalued and primed for substantial gains. Fisher's emphasis on PSRs stems from his belief that sales are less prone to manipulation than earnings, making them a more stable and transparent metric. He demonstrates how a low PSR, combined with other favorable attributes like a strong industry position, innovative products, and competent management, can signal a superstock. However, he cautions that not all low PSR stocks are worth investing in. The company must also exhibit sustainable growth prospects and a clear path to profitability. In the second section, Fisher provides a detailed methodology for identifying superstocks. He outlines a step-by-step process for analyzing companies and industries, starting with understanding market trends and identifying sectors experiencing rapid change or expansion. Fisher encourages readers to focus on companies that are leaders in their industries or have a significant competitive edge, such as innovative products, cost advantages, or strong brand loyalty. He also highlights the importance of analyzing a company's financial health, looking for manageable debt levels, steady sales growth, and efficient cost management. Fisher places significant importance on qualitative factors, such as management quality and corporate culture. He advises investors to evaluate the leadership team's vision, execution capabilities, and track record. Companies with visionary leaders who can adapt to market changes and capitalize on emerging opportunities are more likely to become superstocks. Similarly, Fisher underscores the role of innovation and research and development, R&D, in driving long-term growth. Companies that invest heavily in R&D and continually bring new products or services to market are better positioned to outperform their competitors. One of the key takeaways from this section is Fisher's emphasis on understanding the industry lifecycle. He explains that industries typically go through phases of growth, maturity, and decline, and investors must identify companies at the right stage of the cycle. Early-stage industries often present the most significant opportunities, but they also come with higher risks. Fisher advises investors to balance risk and reward by diversifying across multiple high-potential sectors and companies. The third section focuses on the strategies for managing a portfolio of superstocks. Fisher advocates for a long-term investment horizon, emphasizing that patience is critical for realizing the full potential of a superstock. He cautions against short-term trading, which can lead to unnecessary transaction costs and missed opportunities for compounding. Instead, he encourages investors to hold on to their positions as long as the underlying fundamentals of the company remain strong. Fisher also addresses the psychological challenges of investing in superstocks. He acknowledges that these stocks can be volatile and may experience significant price swings, especially in the early stages of their growth. Investors must develop the discipline to stay the course and avoid panic selling during market downturns. Fisher emphasizes the importance of sticking to a well-researched investment thesis and not being swayed by market noise or short-term fluctuations. In addition to holding for the long term, Fisher advises investors to regularly review their portfolios and monitor the performance of their superstocks. He provides practical tips for identifying when to sell a stock, such as when the company's growth prospects diminish, its competitive position weakens, or its valuation becomes excessively high relative to its fundamentals. He also warns against falling in love with a stock and holding on to it longer than justified by its performance or potential. Fisher concludes the book with a discussion on how to adapt his strategies to different market conditions. He explains that while his methodology is rooted in long-term principles, investors must remain flexible and open to adjusting their approach as markets evolve. He encourages readers to stay informed about economic trends, technological advancements, and geopolitical developments that could impact their investments. Throughout Superstocks, Fisher uses real-world examples and case studies to illustrate his points, making the concepts accessible and actionable for readers. He shares stories of companies that went on to deliver extraordinary returns, as well as cautionary tales of missed opportunities and mistakes. These examples provide valuable insights into the practical application of his methodology and highlight the importance of thorough research, discipline, and a long-term perspective. In conclusion, Superstocks is an essential read for investors seeking to uncover high-growth opportunities in the stock market. Fisher's innovative approach, centered on the price-to-sales ratio and qualitative analysis, offers a unique framework for identifying undervalued companies with the potential for exceptional returns. By following his guidance, investors can develop the skills and confidence needed to navigate the complexities of the market and build a portfolio of stocks that outperform over the long run. The book's combination of practical advice, data-driven analysis, and engaging storytelling makes it a timeless resource for both novice and experienced investors.